All right, folks, we have a major headwind. We had a major step we just crossed because things are not going to be the same after today because the SEC meeting on transparency just ended like few minutes ago. So I watched the whole live stream on the website of the SEC, and I'm going to summarize in this video the main items that you need to know moving forward and how it's going to change the whole squeeze on AMC and also GameStop as well. So first off, we have a yes on all the recommendations on the new proposed rules to change the way dark pools work and also the way the new regulations around reporting losses, reporting anything on the activity for hedge funds and private equity firms. So we had this panel, 4 people. Of course, Mr. Gensler, the chair, and then we had 3 commissioners. All 3 voted yes to all the recommendations, and these commissioner, Ms. Pierce, didn't vote yes for the 2 recommendations. All right. So first off, this is the main highlight. All right. I made a big presentation, the SEC transparency proposal. These are the main highlights. First off, markets were evolving since the last 20-25 years, but the regulation did not. The compliance rules did not evolve at the same pace as the markets, especially when it comes to the evolution with technology, algorithm, high frequency trading, etc., etc. So the purpose of this meeting was to how the SEC can still be a big dog, how the SEC can still, show authority and be firm into protecting the investors and also making sure that markets are fair and transparent, and we have fair competition for every player. It doesn't matter whether you are, a big dog, on Wall Street or just a small average Joe retail investor on the street like you and I. So they needed to make sure that the regulation was also modernized to catch up with markets. And in the meantime, there was an urgent need to stabilize the risk by boosting transparency because on what we call ATS, alternative trading systems, that also include ECN, dark pools, private exchange, those were not as regulated as they should be. But the market was being more active using those platforms rather than just going to the lead exchange where you and I have only access to those and not to these ATS, alternative trading system. So we also needed to have these platforms regulated because trillions of dollars are going through these platforms. So let's go back to what an ATS is. An alternative trading system is a trading venue that matches buyers and sellers for transactions that is unique about that is not regulated as the exchange, like traditional exchange, the lead market, the New York Stock Exchange, the NASDAQ, ARCA, etc., but is registered as a broker-dealer focusing on fighting counterparties, the buying and sellers for securities transactions. So that's why it needed to also be regulated. Now let's see at something really interesting here, because if you look at what alternative trading system involve, here are some examples. We have electronic communication networks, dark pools, crossing networks, and call markets. So we're going to focus here on dark pools. So the reason why I mentioned this, the thumbnail is bye-bye dark pools, is because moving forward after this proposal, the dark pools are not going to be functioning the way we know it now. So it's going to be a major change moving forward. Now, looking at what the SEC, it's actually looking into, when it comes to this proposal, you can see that here. Currently, this is a proposal on the amendment to the PF when it comes to the market makers, the hedge funds. The proposal also will require advisors to private equity funds to file current reports within 1 business day of the occurrence of one or more reporting events pertaining to the execution of advisor-led secondary transactions, implementation of general partner or limited partner clawbacks, removal of any firm general termination, etc., etc. The proposal is designed to allow the SEC and the FSOC to receive more timely information about certain events that may signal distress at qualifying hedge funds and private equity firms for market instability. 1 business day. It used to be quarters or even years. Currently, this exact same form requires advisors to file this same form months after quarter end and year ends, depending on the size of the type of the private funds or the firm they advise. Now, the proposal is now changing this within one single business day of the occurrence of these reporting events. It means if you're short selling a stock, if you have a change into any activity that may be market mover, that may drive the market higher or lower, you need to report it in a business day. Do you know how devastating that could be for all of these hedge funds was playing under the table using dark pools? Now it means that literally, if you are over leveraged, you cannot hide it for the next month or for the next quarter in order to disclose that, or giving you time, buying you time to actually trying to manufacture anything to get out of that tricky situation. Now you have to file a public disclosure to the SEC and also other agencies in order to make sure that, hey, we know exactly what you guys are doing. So it exposes the whole business of short selling. It exposes the whole business of what is happening within dark pools. Now, the other main rule that was proposed today was about investor protection and communication protocol systems and ATSs, regulating the ATSs. This proposal will apply the investor protections and fair and orderly market principles of regulation of ATS to ATSs that trade U.S. government securities or repurchase and reverse purchase agreements, repo, on government securities. The proposal will also apply the systems integrity provisions of regulation SCI to certain ATS that trade government security. Initially, this was only something that was applied to all the ATSs, all the platforms, the dark pools trading only bonds. But now you have to change the way we even define those ATS, because some are the private exchange and using some communication protocol systems that needs to also be regulated. So now you cannot just give access or deny access to any market player without the SEC knowing why you're doing that and what's the extent and the angle behind it. But more importantly, you have now every single ATS, every single platform, whether it's private, whether it's a dark pool or not, being on the same page as what we call an exchange, meaning they all now have to comply to the exact same rule. They now have to also, on top of reporting and being regulated, they need to they have a new obligation to file public disclosures. So something to also put into mind here, into a situation, is the fact that this was a joint venture among many agencies. So it's not just the SEC working alone. It was also the Fed, the SEC, the Department of Treasury, the CFTC, the FSOC, bunch of other main federal agencies. And I guess that's why it took so long to actually coordinate all of these efforts, because the SEC doesn't have much resources to do the work it's supposed to do. That's why I think it was really smart from Mr. Gensler to actually have these other agencies coming together, because this is about protecting the retail investors. This is about protecting investors in general. This is about making sure that markets are more transparent. And I believe that moving forward, this is going to be something that will dramatically change the way AMC and GameStop moves. Is it going to be something that will switch the share price literally as of today or tomorrow? Not necessarily, because it still needs to go through public feedback. It still needs to be commented and it still needs to be implemented. But as of now, the signal has been triggered. Things are not going to be as they were so far. So what we've been seeing in the last 13 months, 12 months into AMC, I guess now we can have some margin calls. Now we can have hedge funds paying and finally getting after the FTDs. Again, it doesn't have to happen necessarily now, but it's the right move. It's the right step, towards getting closer to the moon. So I couldn't be more bullish after this. Seriously.